Hello everyone, welcome back to Current Economy and Investment Insights, and today is August 2nd, 2021. I'm Ron Jankowski with Channel 4, and of course I have Paul Munichol from Ameriprise as a co-host. Paul, can you give us an update as to what took place? You and I haven't seen each other for
It's been a while.
this last 4 weeks, and lots of activity has taken place, and then when you're finished, I'm going to give the viewers an opportunity to hear what is transpiring as of this morning. Also, we have a note from Ameriprise sharing that with us, so take it away.
Thanks. I actually want to start out today's show by giving a report that came out last week, just because it is very important concerning global growth of the economies. So I'm going to dive into the data. Last week, the IMF did boost its 2-year outlook for real global growth. Now, the IMF stands for the International Monetary Fund, and it did release its quarterly World Economic Outlook report on Tuesday last week. Now, the organization maintained its outlook for 2021 global growth rate at a very strong 6%, but it also boosted its 2022 outlook by a solid 0.5%, bringing it to a positive 4.9%. Now, should the 6% growth rate be achieved this year, it would be the strongest pace of global expansion since at least 1980. That's all according to the IMF. Now, in releasing its projections, however, the IMF officials noted a growing divergence in the expected circumstances of developed economies versus emerging and developing countries. So that's a situation that does offer downside risk potentially to the path forward. Now, this was evident in the adjusted forecasts for this year, 2021. Most major countries in the Western Hemisphere were upgraded, while those in Asia were downgraded. Vaccine availability and thus virus conditions were a major consideration in these adjustments, as was individual country fiscal responses. That's all according to their report. Now, additionally, much of the improvement for 2022 comes from a stronger U.S. forecast. Now here, the report noted that the very strong 1.4 percentage point boost versus its April projection is largely based on the expectations for further fiscal stimulus to be passed in the second half of this year. Now, while we agree that the odds of further stimulus, government spending above the pandemic trend reports may be better than 50%, it is far from guaranteed. So definitely some unknowns that are affecting that report that was released, but they're looking for the Western Hemisphere to keep growing and expanding at a very fast rate. Asian Hemisphere we might have to be a little more cautious of, but definite expansion there as well. So lots to watch out for, but it was a positive report for investors.
If the Asian market will be honest with us, then we'll know really what's going on.
You said that, not me.
I said that, not you. Viewers, don't give them a hard time. Okay, you need to know. Can we go into that, Paul?
Let's do it.
Okay, this is, as I mentioned, from Ameriprise, also as of this morning. U.S. stocks are opening August on a positive note as investors shake off concerns about the Delta variant. And Paul, I'm surprised it's having that much impact.
And that's one of those things you just got to wonder how much is true, how much is political, because you keep hearing about this Delta variant and how it's going to affect kids going back to school and how that could affect caregivers staying home versus going back to work. So this Delta variant is or can have a major impact on the economy, and it's something that I am watching very closely.
Okay, and the U.S. Treasury yields are steady ahead of the release of the Purchasing Managers Index later this morning, and I know that's very important report because I used to, when I was with NBC Television, inputted our activity. And of course, it's all related to people airing their commercials and the ratings and the support of that, meaning you're buying equipment. So I remember giving a lot of input to the Purchasing Managers Index.
Wow. And yeah,
Yeah.
and treasury yields is something an investor wants to be aware of too. 'Cause
Yes.
yields affect bond pricing, so something to be aware of on the bond side.
And the stocks in Asia closed higher, even as new data showed Chinese manufacturing activity slowed in July. And I'm surprised to hear that, but again, how accurate accurate is that? Thanks, Paul. Yeah, I really wonder. All I hear is merely questionable. And GE has completed its previously announced 1-for-8 reverse stock split and will be trading on a post-split basis. Is starting today, of course. And here are the year-to-date. S&P 500 is a plus 17%, Dow Jones a 15%, and NASDAQ, again, all of these are a plus, and that NASDAQ is a 14%. So things are solid in there, aren't
And
they?
those are staggering returns again for the major market indexes so far. Keep in mind, it's just the beginning of August, so we've got time to let these things grow even more, hopefully.
Yes, I hope so. Paul, anything else you want to add?
Nope. Coming back in the second half of the show, I got a nice topic for the viewers.
On your money.
Exactly.
Okay, stay with us, folks. We'll be right back. And Paul usually has an excellent topic to share with you. Stay with us. Thank you for staying with us. And Paul has a topic, 5 tips for transitioning into retirement. Stay with him, and he's got some real nice comments to share with you.
Thanks, Ron. And these topics are geared towards that new retiree, but they really do apply to a lot of different investors out there. So let's dive into it.
Okay.
You know, retirement marks the end of a chapter in your career and the start of a new lifestyle. Now, this unique transition can bring a myriad of emotions, most commonly ones of excitement and apprehension. So if you're pondering retiring in the next year or so, here's 5 tips, like Ron mentioned, that we're going to give you to help you transition smoothly. Tip number 1, know the transition could take weeks, sometimes even months. You likely spent decades forming a routine around your work schedule. Establishing your new normal of volunteer work, an encore career, or helping family will take time. So if you are married, remember that your retired status may affect your spouse's routine as well. Talk openly about how you're feeling during the transition to keep your spouse in the loop. Point number 2, communicate your retirement plans with your family members. Your parents, kids, or other family members will likely be interested in how you intend to spend your retirement days. Will you be visiting the grandkids more often?
Yes.
Continuing to host family get-togethers? Or planning to move or purchase a retirement home? As you share your plans, don't forget to discuss your financial picture. The benefits of open communication are threefold. It reassures your kids that you're financially prepared. It allows you to introduce or remind your family of your estate and legacy plans. And it establishes a safe space for both sides to discuss potentially challenging financial topics. Point number 3, maintain healthy habits. Staying diligent with the activities that keep you feel your best is important as you shift into retirement. Prioritize eating healthy, sleeping well, staying fit, and maintaining friendships in your new routine. Tip number 4, this is where I come in, evaluate your finances. So prior to retirement, you likely outlined how you will manage your cash flow. If not, today is the day to put a plan in place. As you enter retirement, review your expenses to ensure they're aligned with your plan. It's common to revise your spending and activities after experiencing the the first few weeks away from your primary job. So it's okay if you need to adjust how much you withdraw from your accounts each month. If you want to increase your spending, calculate what that means for your later retirement years, as you don't want your savings to come up short. As always, when it comes to this type of planning, we recommend consulting a financial advisor for guidance on how to make your money last while living the lifestyle you desire. And finally, the fifth point, reset your attitude. Retirement is not the ultimate finish line. Experiencing a lot of emotions is common, but try to focus on what you're excited about in this next chapter. And remember, you're not alone. Talk to friends, family, co-workers, and professionals in your life for support all along the way. That kind of sums it up for me. Again, I can't stress enough the importance of working with an advisor years before you retire to make sure your plan is in place so that you can retire. And then, as I always tell retirees, new clients of mine, now that you're retired, that doesn't mean investing is over. A lot of people live in retirement for 30 plus years and they need to make their money last that whole time. Investing is still a requirement, obviously before retirement, to build up that nest egg. But once you're retired, managing that nest egg is more important because you can't make mistakes.
Paul, I was just going to make a comment about what you've just said. That is so important. And one more thing that has priority is make sure you mentioned on your second tip, keeping your spouse in the loop. Your spouse should be with you when you're discussing your financial plan when you're retired with the financial advisor. Because if you don't, she's thinking one way and
Yep.
spending, and you're thinking another way and trying to save, and the two have to work together.
Communication is a key. You're exactly right.
Yeah.
You hear stories where one spouse is going out spending, wants to enjoy their retirement years. The other one is constantly worried then, are we spending too much? Being on that same page is very critical in your retirement years.
Paul, what do you advise when you're in retirement? Should you be discussing your process of retirement 6 months or annually?
We look literally years before retirement because that's setting the foundation for those retirement years. And really, retirement shouldn't just be an arbitrary date or age. You know, you shouldn't just say it's 62, I'm going to retire, because maybe you don't have enough of a nest egg saved up at age 62. That's why I'm speaking with individuals in their 30s about retirement so that they've got, who knows, 25, 30 years to plan so they can retire at that age.
Pre-planning is so important.
So that's why I said this show isn't just for retirees. It's for the 20-somethings out there, the 30s, the 40s, the 50s. Every age group needs to think about this, unless you really do plan to work forever, but we know health doesn't allow that. So it's something you got to start planning for right now, no matter what your age is, right today. Start planning. Make sure you've got a plan in place so you can retire the way you want to.
And as I had mentioned, you should be talking to your financial advisor when you're in retirement, at least annually.
At least.
So many things happen from year to year.
Things happen. People buy summer homes, sell summer homes, start to travel,
Yep.
want to help grandkids. They want to downsize their home. Things change in anyone's life in any given year. The difference when you're retired is if you have a pension or Social Security, you have incoming funds. But if you don't have those, you don't have incoming funds anymore. So you can't make mistakes with that nest egg once you're retired.
So, Paul, if one wants to maybe talk to you, if they don't have a financial advisor, you have a number we're going to put up on the screen?
Absolutely. Talk to your advisor first. Search out for one that you'd like to work with. If you don't have one, or if you're looking for a second opinion to the person you're working with, you can call me directly at 708-226-3412.
Well said, Paul. And if you do have a financial advisor, please use them. And this is going to save your money, actually, save your bank account and save your investments. For Paul Municle with Ameriprise Financial, myself, Ron Jankowski with Channel 4 in Palos Heights, we wish you good investment day.